Okay, hello. This is Penny Fitzgerald, your wine mama, with the A-Fitzy-Onados. I have tonight Jen Oftelie on the Zoom call with us. She is a tax expert and has been teaching tax classes and doing preparation, tax preps, and for what, 10 years, Jen?
Yeah, since '04, so
Oh
14 now.
Oh, wow.
Yeah.
Very cool. Well, I'm sure that a lot of us are confused by taxes and want to make sure that we're getting all the deductions that we can and using it to our benefit. So, Jen, with that, I'm going to turn it over to you and let you have at it.
Fantastic. Thank you so much. Everybody, thank you very much for giving me a part of your evening. And hopefully you can see the presentation. I created this actually as a part of a service project for self-employed people, because I truly do think that network marketing is a really cool calling, and I love being able to help with this. So just as a very quick introduction, we're going to blow through this information really quickly, and more than anything else, I just want you to be able to know what you're going to walk away with. Nobody should think that they're going to leave this evening being able to go out and prepare other people's taxes. That's not the point. The point is to give you as much of a benefit, to show you what the benefit is of having your home-based business and get as many deductions as possible. So why you're here, what we're going to cover very, very quickly, why having a home-based business is a tax benefit to you. Either you're going to make money or you're going to have a loss. But either way, it's going to be a tax benefit for you. And what we want to do is make sure that you know what you're signing when you do your tax return. And you're going to have to forgive me because I've had the cold that doesn't end, that has been going on for a month. So I'm sucking on a cough drop. I got water around and I'm going to probably sneeze and cough. So I apologize ahead of time. We're going to talk very quickly about the different options for tax filing and how to save money if you're going to a paid tax preparer, and then just what a tax return really looks like, so you know what you're signing. Again, the whole point of this, know what you're signing when you get your taxes done, and know that you're getting the best deductions possible. And then we're going to go through an example of somebody who has a job and is self-employed. And we're going to walk through the return again very quickly, because again, it's taxes. I know it's not a sexy subject, and I hope you all have your wine, but it is taxes. And we just want to really know the deductions that you can take, what the IRS looks at, things that are typically missed, and then business use of home, because that's a big one, especially for network marketing businesses. And then we're going to cover really briefly at the end what you want to do and how you want to prepare for when your business really explodes. Because truly, as this organization works, that's what will happen if you stick with it and you actually do wine tastings and you work your business. So who am I? That's a picture of me. And again, I'm sick, so I know I don't look exactly the same. And why you're going to listen to me? Well, first of all, you're getting a money-back guarantee tonight. And granted, you paid nothing. So hopefully that money-back guarantee isn't going to bankrupt me. But my real job, I work for the Weld County Sheriff's Office. I'm the business and budget manager. I've worked in law enforcement and finance for about a dozen years now. And I also have been working on becoming an enrolled agent. And what an enrolled agent is a tax professional, like a tax expert with the IRS. So it's the equivalent of a CPA and an attorney, but just for taxes. The two things, I was just telling Penny, the two things that I actually feel comfortable getting up in front of people and talking about are wine and taxes. And like I said, I worked as a paid preparer, 14 years ago. And then I volunteered for over 10 years to kind of earn back the karma that I got for working from a paid tax preparer. And I will tell you also, the biggest pet peeves that most tax preparers have is if you wait until the last week to then get your taxes done, especially if you have your own business. And then if you have either a shoebox, like here's all my receipts, or you have nothing, and you're like, well, yeah, I know I have stuff, but I just don't know what it is. So those are the biggest pet peeves, not just for me, for pretty much any tax preparer. And we're going to go over why it's important to make sure that you don't do that, because it will save you money to be prepared. And then the other thing is I know network marketing. I love this business. I just hit my 2-year anniversary. I'm a 1-star leader with this company, and I just absolutely love this business. I think it's amazing. As far as having a home-based business, here's the thing. You're going to want to give up, and as long as you're actually working your business, don't give up. You just never know how close you are. And if you decide that this business isn't the right one for you, or however that works, having a home-based business is truly, in my opinion, it's always a great benefit. So pick one that you really, really like, and pick one that is a good company to work for, and stick with it. And the nice thing about it is, especially with the traveling vineyard, is wine is deductible. Wine truly is tax deductible, and cheese and chocolate can be tax deductible. I mean, where else can you go and have that kind of a tax deduction? So again, you're either going to make money or you're going to reduce your tax liability by having a loss. So either way, you're going to come out ahead. And the one thing that I always tell people too is, if taxes are not something you're good at, if the bookkeeping side isn't something that you're good at, find somebody to do that for you. Focus on what you're good at and actually.
Oh, lost her.
Yeah, Jen, are you there?
TurboTax, however, it can be a really great program. And forgive me if my internet goes out.
Yeah,
you can use it
a little bit.
I'm sorry?
We lost you for just a little bit there. Yeah, if you could back up to the beginning of this slide. I think it was right at the end of the last slide that we lost you.
Okay, good. You missed my rant on TurboTax. That's great. No, truly, you have a lot of options for filing your taxes. Paid preparer, most people get more money back by going to a paid preparer, but you want to interview whoever you do your taxes with. Interview them. You need to be comfortable with them because it's a legal document that you are signing. Read that very, very bottom line. You have to know what you're signing, and no matter what, you are still responsible for what's on your tax return. Okay? Again, enrolled agent, my personal opinion is enrolled agents are a really good value for the money. However, if you have a family and you make under $45,000, you can also go to a volunteer income tax assistance, which is limited by income, and you have to be organized. And so you can Google VITA, which is volunteer income tax assistance, and find one in your area. But that is also a really good option if they do Schedule Cs, and you're in that lower tax bracket, which is phenomenal. And that's what a lot of the people that do home-based businesses are. So here we go with the tax return basics. If you look at a 1040, it's all math. It starts out with your income, and then you subtract out your adjustments, and that's page 1 of the tax return. Income minus adjustments is your adjusted gross revenue. And then on page 2, you start on page 2, you have your adjusted gross revenue, you take away all your deductions, and then you get your taxable income. And then you look at how much tax you owe based on that taxable income, reduce it by any credits that you're eligible for, and then whatever you paid in. And that either will get you what you owe or what you're getting back, okay? An extension, all an extension gets you is when you have to file your return. So if you know you're gonna owe $1,000 in taxes, the extension doesn't mean you have an extra 4 months to pay it. You still gotta pay it by April 15th. All it gives you is that extra 4 or 5 months to file your tax return. And then there are earned income-based credits. So that's one thing that we touch on really, really quickly here tonight, is that sometimes it's not in your best interest to take all of your deductions. Sometimes it's in your best interest to have a little more income, because then you're eligible for credits that you might not be eligible for otherwise. So we really want to look at that. And that's why when you get into like a tax preparer, they're going to help you with that. TurboTax, TaxSlayer, none of those self programs are going to know that for you. When you cash out a retirement plan, not only are you increasing your taxable income, but you're getting penalized. So we really encourage people, don't cash out those retirement plans if you can avoid it at any cost. And then the one thing too that a lot of people get confused on is, if you have your home-based business, that doesn't have any effect on whether or not you take the standard deduction or itemized deductions. So the standard deduction is something that any human being is able to take, and it just subtracts money off your taxable income. And when people itemize, all that's saying is if your mortgage on your home interest, let me try that again, interest on your home mortgage, and the property taxes that you pay, and your medical expenses, and all those different things, if that adds up to be more beneficial than your standard deduction, then that's how you itemize. But your business has nothing to do with standard versus itemizing your deductions. And then employee versus self-employed. And we're going to look at that in our example, because most people, especially that do this as a part-time gig, have a full-time job. Like I said, I work for the sheriff's office, and they have a part-time, their self-employment, their home-based gig, and that's where you're self-employed. So we're going to talk about the difference in how those are reported, and then also why we pay self-employment tax. Now, most people will stop a business like this because they don't want to pay the self-employment tax, where the reality is you're already paying it if you have a job. It's just taken out of your paycheck before you see it. And so self-employment, you get to reduce that as much as possible with all these different things that you get to spend money on. And then you only pay it on just that little bit that you have left as a profit. And the last thing, and this one is actually probably the most important, it's business versus hobby. So if you're in this kind of a business and you are always losing money, always losing money, you make $200 and you spend $1,000 every single year, that at some point the IRS is going to come back and say, hey, it looks like you're not really trying to make a business of it. It looks like that's a hobby. Well, if that's the case, they're going to go back and they're going to take away all your deductions, but you still got to claim your income. So what the rule is you are able to take a loss in 2 out of 5 years. And so if you're taking a loss every single year, then this might be the year that you want to show a little bit of a profit so you can show that, you know what, I really am trying to make this business work. And again, that's where it comes. You don't have to take all of your deductions. But overall, that could be the most beneficial for you when it comes to your business. Okay, so here we're going to go through an example, and I know I'm going to blow through this, but I don't want to take up your whole evening, and hopefully I'll get through before you guys get through a bottle of wine. So we have our self-employed, our single mom who has a job and a business, and for this specific example, we're using Jane Smith, who is doing her business with For the Love of Baking, and so and if you see there under number 7 on the form, if you made over $600, the Traveling Vineyard under Phoenix, what is it, Penny? It's Phoenix Vintners.
Vintners, uh-huh.
Yep. So you would have received one of these, and in box number 7, you're going to see your non-employee compensation. That's your money. Now, with the Traveling Vineyard, one thing that you should know is you should not have any other income outside of what the business pays you, because unless you have a liquor license, you're not selling anything outside of what is done through your website. So for this specific business, you should not have any other income outside of what that box 7 says. If, for example, you have a different business, Mary Kay as an example, you could have your non-employee business compensation and then also other income from checks and whatnot from other companies. So, and the reason I say that is because just because you work this business doesn't mean it's your only network marketing business. So in this specific example, Jane Smith made $3,500 in the year. And Jane Smith also is a teacher. So if you see here, this is her W-2. This is where she's an employee. They tell her when to show up, where to show up, and how many days she has to be there. And if you look at this example under box 1, she made $24,500. Box 2 is also very important. She had withheld $2,500 in taxes. So, and if you look, that's pretty typical in the United States. If for under about $80,000, your federal tax withholding should be 10% or more of what you made. So box 2 should be approximately 10% or more than box 1. Okay, so this is her example. This is her job, her job, just above broke job. So what we're looking at tonight is, if you look on here, this is your 1040 page 1, and we're looking at what in the world do we put on line 12, which is our self-employment income. Because you'll see line 7, her wages, that one's easy. She's got the W-2. That's really easy. You just put it in and it's golden. But what we need to find out is what we're putting in on line 12. And we'll see, and you see here as a single mom, she's got her son, so she's got her exemptions, blah, blah, blah. All right. So here's the Schedule C. This is the top of the Schedule C. If you look there, and I don't know if you can see it with the little camera, the little videos, but what we've done is I've taken from the Schedule C instructions, they ask for a code. What's the code for this business? And there's actually a direct selling code now, which is brand new in the last couple of years. And this is what I use for my business. It's that 454390 code. But if you feel that doesn't work, or if you have multiple businesses that you have under like one business name or something like that, you can look through that and find the code that works the best for you. Or you can use, you can kind of see it there, the 999999 code, which is, it's basically a miscellaneous code. The one thing that you want to be consistent with, though, is you want to use the same code year after year. So if this is your first, second, third, fifth, 15th year doing this business, you really do want that code to stay the same. So in this particular example, if you look at this top of the Schedule C here, Jane Smith is using cash accounting method, and that's under line F as in Frank, or F as in Fitzy. And then did you materially participate in the operation of this business? This is another one. Hey, is this a hobby, or is, oh, hopefully I'm still there.
Yeah, you're phasing just a little bit.
Can you hear me?
Now, yes,
Sorry, guys. I'm using my cell phone for internet.
Oh, jeez.
So materially participating in your business, this is the hobby versus business thing that the IRS looks at. And then in this particular example, Jane Smith is starting this in 2017. This is her first time filing this business. And then did you make payments that would require you to file a Form 1099? So if, for example, you're contracting with somebody to make phone calls for you or to do paperwork for you, and you pay them more than $600 in a year, then you would be required to file a Form 1099. Most people don't do that, so we're not going to cover that, okay? Now, cost of goods sold. So we have the $3,500 from the 1099 that we received. If you have a liquor license, then you, as a traveling vineyard wine guide, can have cost of goods sold. However, 99.999% of you should not have a liquor license and should not have cost of goods sold. So that's a big no-no. So, and I made this slide specifically for this company. For a different example, Mary Kay, a lot of people, or, you know, pick one. I just use Mary Kay because it's very, very popular. If you buy inventory and then you sell from your inventory, that's where you have cost of goods sold, okay? We never have cost of goods sold because we don't sell wine directly, all right? And that is very important. And that goes there under the income for the Schedule C. So now we're just working on the Schedule C. All right, so now here's the second part, the middle section of the Schedule C. And these are all the different deductions that you can possibly take. Advertising, car and truck expenses, commission and fees. And it's like, oh my gosh, how are we ever gonna know what we can actually put in there? So how I describe this as, what dollars did you have to spend in order to make dollars with this business? Okay, so advertising, website fees, that's something that our business has. One thing that some people forget is a percentage of your home internet and your cell phone. Guess what? You guys are all on the internet right now, learning about how to do your taxes for this business. So a portion of your internet can be deducted. Now, if you go through and say, oh my gosh, I was on the internet for an hour in the whole year, you can't deduct 12 months of internet expenses. You have to be really logical about this, and you have to prove your expenses. Another thing is training classes. This is our regionals. This is harvest. If you have wine guide meetups with different people in the Fitzys, however that goes, these are the different things that you can possibly deduct as part of these. And the nice thing about this is, everybody, you don't have to be exact on which category these go in. If you have it under commissions and fees, but somebody else has their registration under professional services, the IRS is not going to come and put you in jail, okay? It's truly, you just want to have your expenses documented. And so don't stress out about what category you're putting them in. Just make sure you get them. Make sure you go through each of these and really look at them and say, did I pay for anything that could fit under here? And so another thing is like supplies. Did you buy business cards? Do you buy gifts for your host? Do you samples for guests? I'm assuming that a lot of us buy our own jelly beans and grapes and lemons and things like that. So make sure you deduct that. Keep those receipts. But that's the key. You got to keep the receipts. And then personal development classes. That's one of the coolest things about home-based businesses, is that as you take these leadership classes and personal development classes, you can deduct them, and that goes off of your taxable income. The other cool thing is, for example, I bought a printer because I hated I had a cheap little printer for when I printed out my wine inventory list and my booklet. And it was so frustrating. So I bought a nicer printer, and I did that specifically for the business. Well, now I get to write off, and I always go very conservative in my write-offs. So I'm like, well, at least I'm going to say 60% of that is used for the business. It's more like 95%, but I don't want to have too big of a loss for the year. And then the other one is also meals with potential clients or wine guides. So, for example, if I think somebody would be a great wine guide and they're just like, oh, I don't have time to host a party. Well, you know what? Hey, let's go get coffee. Let's go and get a cup of coffee and let's talk about it and things like that. Well, I can write off my coffee and their coffee if I buy it, and I can write that off as a part of my business building expenses. Now, if I say to the same friend, it's like, hey, your birthday's coming up. Let's go out for dinner and wine, and now I'm writing it off. No, that doesn't work. You have to be have some integrity in what you're writing off. But truly, anything that you do in order to earn $1, write it off. So in our specific example here with Jane Smith, we're going to say, and again, the categories don't really matter as far as where you put them. It's not super important. The only ones that are important are the car and vehicle expenses. So Jane Smith bought business cards. And then remember, this was her first year. So she had 10 months of the website at $16 an hour. And she paid that under the legal and professional services. And she did training. She went to Harvest and she went to regionals. So she's got registration fees that she paid for, the commissions and fees. And then she was really nervous about working with liquor. And so she got prepaid legal for work. And granted, she used it for her will as well. So she only is writing off about 20 to 30% of it or whatever she decides. And then all those sheets that she prints out for the booklets, that's under her office expenses. She has a couple of host gifts. Hey, and you know what? She got some extra wine. She did a personal order, and she invited some friends over and had wine and cheese and chocolate. And they did a big tasting to figure out or maybe Girl Scout cookies, to figure out, like, when I do my next party, how am I going to say, hey, if you come in and you say, hey, oh my gosh, I tried this the other night with a group of friends and this was phenomenal and this paired really well with this. Well, guess what? You can write off the groceries that you bought for that tasting and the wine you bought off for that tasting. Or another example is if somebody says, hey, I only drink XYZ Moscato, and I want to know what's similar. And you're like, and your response is, well, I've never had XYZ Moscato, I don't know. And you go buy a bottle because you want to be able to figure that out. You can write that off too. That's an expense. It's what a part of the supplies that you're buying to make money in this business. That's the big key, to make money in this business. And then just remember that meals are done at 50%. So if you spend 10 bucks on coffee, $5 is deductible. And so I highly recommend, unless you have the budget to do that, don't go out buying people meals and coffee just because you want to write it off on your taxes. That's not the smartest way to go about it. But know that when you do it, you can deduct it. And then the other thing, like the phone, internet, and leadership classes, those are big things that people, they miss. Now we're going to talk about mileage. And so we're going on page 2 here. This is the page 2 of the Schedule C. There's 2 ways, excuse me. There's 2 ways to do mileage. You can do actual expenses or you can do the mileage. And the difference is, if you do actual expenses, and now thankfully we're at the beginning of 2018, if you do actual expenses, that's everything. That's every car payment, every insurance payment, every time you get gas, every time you get windshield washers replaced, anytime you get an oil change, every penny that you spend on your car, you can deduct the percentage that you use it for business. So you have to track the mileage, okay? Just because you're tracking expenses doesn't mean you get to write off 100%. If you are tracking expenses in this particular example here, you're going to see here that the mileage that Jane Smith uses her car is less than 5% of what she drives total. So when you do all of that math and you have all of those records for all of those expenses for that car, you're only getting to take 5%. Okay? Now, if you have a car if you pay a business mileage, my internet, I'm so sorry, guys. I'm sorry. The business mileage deduction is usually about 50 cents a mile, and that is typically more beneficial for most people to do the actual standard mileage. So either way, actual expenses or mileage, you have to keep really good records. I think the biggest difference is if you do standard mileage, which is what we're doing in this particular case, we're taking the 50-some cents a mile, you can't switch back. So once you take standard mileage in this business, you can't switch back to actual. You can't buy a $60,000 car and now write it off on actual expenses, okay? So if you're gonna do actual, stick with actual. If you're gonna do mileage, stick with mileage. And then, now granted, I'm a numbers geek, I'm a nerd. I totally understand that I'm a nerd. So what I did in this particular example is how I do my taxes for my cell phone. If you look at part 4, it says my cell phone at 50% 1 week a month. So I work my business 1 week a month. And in doing that, in that 1 week, I use my phone about 50% of the time for this business. For the rest of the week, I'm usually working my real job and I'm using it for that. But I'd say 50% for 1 week a month. So I look at my phone bill and I look at, okay, well, 50% times 25% is $1,250 times 10 months. And you know, that's me. You don't have to be that detailed in it, but you have to know how you came up with the number that you're deducting. So your phone, your internet, and all those different things, track what you're using. If you're using it, if you only use your internet to get online and run this business, then deduct it. But if you use your internet for streaming Netflix most of the time and watching movies with the grandkids, then guess what? You're not using it 100% for business. So again, you want to be very accurate and you want to be concise and have written records for the things that you're deducting. Mm-hmm. So we're going to come back to page 1, and that 1,184 miles, business miles at 53.5 cents per mile is $614 just on mileage. So that's a big deal. Mileage is probably the biggest overlooked deduction that that people have, and we're going to come up to this. You've got to have good records. No matter what you do, you have to have good records. All right. So now, here's the thing. Guess what? Oh, let's go back. So you're going to see here, we made some money. This year, in this example, we made a little bit of money. We made about 500 bucks. We made through 3,500, but we're showing a profit of about 500 and some dollars. 575, it looks like. And out of that 575, now we got to pay self-employment tax. So this on your real job, this is the FICA and Medicare that they already take out of your paycheck. And that's 12.5% that they take out of your paycheck. So for self-employed, we're only paying that tax on the stuff that you've already taken all your deductions. This is the only place you're taking that tax. And so out of that $3,500 that Jane Smith made, she has to pay $81 whole in self-employment tax. Okay. Now, if you look at the very, very bottom, it says that there's a $41 deduction. I'm going to show you where that goes. But the other thing that I want to point out here on the left of the screen, if you make less than $400 profit, there is no self-employment tax. So again, when we're going business versus hobby, as long as you can take as many deductions as possible, but if you can keep it so you have less than $400 of profit, then it's not going to really affect your taxes at all, because you show a profit. So with the IRS knows that you're actually running a business and this isn't a hobby, and then you don't have to pay any self-employment tax. Yay, yes. All right. So that $41. See here. So we got line 7. Excuse me. Line 7 is the job. That's the $24,000 that we made as a teacher. Line 12, that's after we took all of our deductions. We made $3,500, but after all our deductions, we're showing profit of $575. And then if you look at line 27, we get to deduct half of that self-employment tax. We get to deduct that. So you want to watch that. Again, this is where you are responsible as a taxpayer. If you have a profit and you're paying that self-employment tax, make sure you're getting that deduction on page 1. All right? So our adjusted gross income here is $25,034. So let's go to page 2. So Jane Smith. We're starting out with our adjusted gross income of the $25,000, and here's where the itemized versus standard deduction comes in. And itemized is typically when you own your home. And the reason that they do that is because it's your home mortgage interest, the medical expenses, charitable giving, property taxes paid, your car taxes paid, things like that. And it has to equal more than what the standard deduction is for it to be beneficial to you. So Jane Smith is a single mom. It's more beneficial for her to take the standard deduction. So we reduce that from her income. And then the exemptions. An exemption is $4,050 for every living human being in your house. This is where people say, man, I wish I could claim my dog. I could get an exemption for my dog. Sorry, you can't. We need living, breathing humans in the house. So we got her and her kid. So that's $40.50 each. That's $8,100. And so we're reducing our taxable income by another $8,100. So what Jane Smith is actually paying taxes on, line 43, $7,584. So again, she made $24,500. She made $3,500 with the business after taking all of her deductions and everything. She's paying taxes on $7,584. And her tax rate is basically 10%. So she owes taxes, income taxes, of $758. Now, here's where the $3,500 actually has an impact. And this is where if you have a loss, this is where it has an impact. So she made $3,500 in this business, which increased her taxable income, her income tax by $53, because it's about 10%. So $575 and it's $53 is what it ends up being of taxable income. And then she has to pay $81. You'll see on the tax return, line 57, she has to pay $81 in self-employment tax. And again, you're already paying that at your job. It's just taken out out of your paycheck by your employer. So in this specific example, she owes $758 of tax. That's line 44, okay? And then because she has a kid who's under the age of 17, she's eligible for a child tax credit. Yay, child tax credit. So now her income tax is down to 0, okay? But she still has to pay that $81 of self-employment tax. That doesn't get wiped away. That one you have to pay no matter what. Well, guess what? She paid in line 64 with her real job. She paid in $2,500. So she's already taken care of that income tax or that self-employment tax that she's supposed to pay. Now, the reason I highlighted line 67, that I highlighted line 65 is because as you make more money and you know you're going to be making a profit with this business, this is where you're going to want to set up self-employment. You're going to want to make quarterly payments because you know you're going to owe the IRS. Because one of the things the IRS is really good about doing is if you owe more than $1,000, they're going to say, hey, we should have gotten interest on that. So we're going to penalize you because we should have gotten interest on that money instead of you. But if you notice in this particular example, Jane Smith is getting $2,600 back and the IRS is like, hey, here's your money. They don't care. They're not going to give you interest, but they want their interest if you're holding on to their money. And then I did, again, this is just tax law knowledge for that earned income credit as a single mom who makes under $40,000. She would be eligible for another $2,332 of earned income credit for the amount of money that she made. So this is where you really want to look at how many deductions do I take to maximize the credits available to you when you're going through your taxes. All right. So in this particular example, all of her income tax was wiped away by the credit. And if you see there, line 67, the child tax credit is $1,000 per kid under the age of 17. So the $750 that she had before plus the $242 equals $1,000. And then, so she gets that whole credit there because she has earned income. And then she's getting pretty much every penny plus some of what she paid in back. And that's the benefit of having that home-based business. So here's the thing. You need to document. If the IRS comes and knocks on your door and says, hey, prove that. You said you made this, prove that. You said that you spent this, prove that. You need to have documentation. My personal opinion for mileage. Now this is something where the IRS can be really picky about. So you got to be careful on this. But the IRS does not allow commuting, okay? So if you are driving from home to work every day, that's your commute. Nobody gets to deduct their commute. Well, for a wine business, if you're driving from home to the wine tasting and back, and that's your only business, then it can be considered a commute. So this is where the IRS gets really, really touchy, and we want to be very, very careful on how we document. Another example would be if you are going out shopping for supplies and for host gifts and for the jelly beans and the lemons and the grapes, and you're going out and you're going to go all day long and you're shopping, and you're just going to stop and do that on your way. Well, how much of that is really work? I mean, if you're dropping the kids off and you're doing this, that, and the other, and you just run by the store, how much of that is really work? So you really, really want to be careful about documenting your mileage especially, but your other deductions as well. The reason I'm leaving the house is to go make money. So, and my internet is losing again. Give me a second. It'll come back. Hey, can you hear me?
Yeah. Yep.
Okay. Sorry about that. I print out my calendar for the wine tastings that I go on, and I do my mileage to the wine tasting and home. But then I track the mileage for all the different shopping trips and everything I do, but I don't deduct that. So then if there is ever any question, I'm on the conservative end of it. Another option that I was told by an IRS agent is get a post office box really close to your home. And that way, commute to the post office box and then go do your whole daily routine from there. And that way you're never having to have that issue of is it your commute? You never have to worry about that. One thing that we talk about too is the Ziploc method. So if I put all of my food receipts in one Ziploc bag, or I put all my January receipts in one Ziploc bag, and I have 12 bags for the year, or 15 bags for one for every category, as long as you can organize and show your receipts, then you have documentation. But you have to have documentation. If it isn't in writing, it didn't happen, okay? And then again, you do not have to take deductions. So you really want to work with somebody. You're going to want to interview your tax preparer to figure out what the best benefit is going to be for you, and to get the most money back possible on your tax return. My big thing, keep a spreadsheet. And I actually have one that I prepared for this presentation. And it also has some ideas, some kind of jog your memory type things. So you can look at that spreadsheet, and it's basically an example of it is down below. And you can just write down this month I did this month I did this. Now, business use of home. This one is really important. Let's say, for example, you're like, oh, I use my dining room only the only reason I use my dining room is for this business. Well, if you're going to deduct a portion of your house as a business use of home, it has to be exclusively 100% never used for anything else, this business. So if you use your dining room once a year for a dinner party, or you use your dining room to put your groceries as you come in the house, guess what? It's not 100% for business. If you have a spare bedroom that you have an office set up, and your husband uses the office for something, and you use the office for something, and you keep your Christmas decorations in the closet, that's not 100% for this business. And the reason that I'm really, really careful about that is the IRS I've seen it happen where they come in and they disallow that expenditure, that deduction, because they walk into a room and there's Christmas decorations in the closet. So 100% for business means never, ever, 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 ever used for anything else. And it doesn't mean that that's not possible. A lot of times that's possible, but you have to be really good about documenting that. And then what the form is what's directly related to those expenses versus what's indirect. So things that are indirect are like your mortgage interest or your rent, your water bill, things like that. Things that are direct, if you have a climate controlled room where you keep your wine, because if you're that fancy, then you're probably a little more sophisticated than what this one is. But hey, that's but if you like paint a room and you have it climate controlled, you create it that way just for this business, that would be considered a direct expense. Okay, everything else is indirect. And the one thing I'll also tell you on this, if you depreciate the value of your house, know that when you sell your house, whatever you depreciated now becomes income. So my personal opinion, stay away from it until you get to the point where you're making so much money that that's the only way you can do a deduction. Okay? And again, document. It has to be true. Otherwise, and if it isn't in writing, it doesn't exist. So as your business grows, one thing that you can look at as your business grows is setting up an LLC or an S Corp. And we're not going to go into that tonight because most people that are in home-based businesses are not working it to the point where they have another job, they're doing this on the side. However, when you get to the point where you're like, you know what, this is it, this is my job, then you can look at the LLC limits your liability. That's what it means, limited liability corporation. S Corp is where you can basically, your business is a completely separate entity, and you take a paycheck from your business, and the rest of the money that you make sits in the business, and you can decide to take a distribution or you can leave it in the business. A couple of the other things, as you make more money, you can set up a retirement plan, get your health insurance. All these things are deductible to you when you are self-employed. So these are really great benefits. And then when you hire somebody, are they going to be an employee for you or are they going to be a contractor? We are all contractors under this home-based business. We get paid as a 1099. If we show up, we can make money. If we don't show up, we don't make money. If you have an employee, they have to be somewhere at a certain time and you have job duties set up for them. There's a lot of software out there that can help you with tracking these expenses and tracking all the different things that you have. And then again, I'm gonna stress this again. When you know you're making money, set up quarterly tax payments. It will help you out tremendously with the IRS as you go forward. All right. I know there were questions, and Penny, I'm going to have you lead that charge.
Okay.
My information is on here. Call or email.
Very cool. Yeah, I've got a couple questions on our chat, so I'll fire them off and let you answer them, Jen. Courtney wants to know, is it okay to take pictures of your receipts? Because sometimes the receipts, on the laser paper get weird and fade and stuff. So are pictures of receipts okay?
Absolutely, yes. Yep.
Awesome.
Just document.
Okay, cool. And scanning them into your computer then would be an okay thing to do also, right?
Absolutely, yep.
Awesome. Okay. And if we already have an LLC set up, can we combine this business onto that?
Yeah, you can. So, and that's one thing I didn't really touch on. If you have more than one network marketing company, each one needs its own Schedule C. Unless you have an LLC that's like an umbrella or a parent company that you have all of your businesses underneath. So it really depends on how you set up your information with the Traveling Vineyard when you set up as a wine guide. But yeah, absolutely. You can set it all up and say, hey, I am a network marketing mogul and I'm going to have 50 businesses and it's all under one LLC. You can absolutely do that, but you better have good documentation on that too.
What's the benefit of having an LLC? I mean, are there
More
tax
than anything,
benefits or is it just more liability?
It's more liability than anything else. A lot of people that are in a partnership do LLCs, and the other part of it is then the businesses that you're working with, you give them a taxpayer identification number, not your social security number. So it protects your personal information a lot more than any just giving out your social security number for a business.
Okay, and an S corp, if you were to do that, you pay an extra tax, don't you? Or am I? I'm not a tax whiz. So our tax person that we work with suggested not doing that, but I'm not sure why.
Well, here's the thing. When you have an S corp, you have to file a Schedule K. So especially if you're going to a paid preparer, most paid preparers either are going to charge you by the amount of time they spend on your return or the amount of forms that they fill out. Well, guess what? If you have extra forms that you have to fill out, they get to charge you more. Mm-hmm. So the more simple you can keep it, the more beneficial it's going to be for you when you do your taxes. So the S corp is really great. So and again, this is typically you don't want to worry about an S corp until you're making some really good money. So let's say, for example, you're making $100,000. Mm-hmm. What the S corp does is you can take a paycheck for, let's say you take a paycheck and over the course of the year, you get paid by the company $60,000. And now you still have $40,000 left, okay? And you've already paid your income, your FICA and your Medicare. You get a W-2 from the S corp saying you made $60,000.
Uh-oh.
That'd be other income.
You said we lost you at you get an income W-2 for your income on an S corp, and then we lost you.
Oh. Okay, where did you lose me?
We lost you at, you said we like if we take 30,000 or 40,000 as an income from the S corp, we get a W-2 for that portion that we take, and we still have $40,000 left as profits. Yep. What do we do? What happens then?
So then you can either let that 40,000 sit in the business, mm-hmm. or you can take it as a distribution. So it still becomes taxable income to you, but you don't have to pay the self-employment tax or the FICA and Medicare on that.
Oh, okay.
So, I mean, and it truly is, you want to have some pretty good income coming at that point in order to make an S corp worth it, because you have to have all the paperwork to have you be a W-2 of your own business, and then you're going to have the Schedule K that will transfer over as well. So, I mean, there's a lot more documentation that has to be done, and typically that's done by a CPA or an enrolled agent, but you're not going to want to go to any just regular old tax preparer to do that. You're going to want to have somebody that has a lot of knowledge in businesses like that. So again, interview your tax preparer, whoever it is. Make sure you interview and are comfortable with that person, because you are liable for what you sign.
Cool. Yeah, I want to give all of my A-Fitzy-Onados a heads up on that, because as we're growing, that I can see that coming. You know, like you want to really be able to prepare for stuff like that and protect what you've built. And well, we're not exactly that far yet. But my gosh, it's possible for any of us. All of us can get there. So I want to bring that up.
Absolutely.
That's exciting. So exciting. Okay, so additional questions that came up. What app do you have an app that you recommend for mileage or business expense tracking? Is there an app like for your phone?
You know, there are. I know there are. I do not have a personal recommendation. I'm old school. I print out my bank statements. I do an Excel spreadsheet. I print out my Google Calendar with the address of where my wine tastings are. I'm very old school with my tracking, and again, I'm very conservative with mine, just because I don't know, I guess I haven't found an app that is easy enough for me to use, because, you know, but again, I know taxes. So for me, I know what I can deduct and I know what I can't. So I apologize, I don't have a recommendation for an app, but I'm sure there are some, and I hope you guys share some ideas on that.
Cool. Yeah, one question was, I work on the fly all the time and curious if Mile IQ was worth it. Do you have any experience with Mile IQ? I don't either. I don't.
Anything is better than nothing.
Yeah.
Anything. Yeah. Anything is better than not doing it, or waiting until February of the next year going, gosh, I wonder what I did last February. Yeah. I mean, anything is better than nothing. So just do something. Whatever you do, do something.
Yeah, cool. Well, and here's another mileage question. Can it be just number of miles, or do you have to have an actual mileage number from the odometer of start and end? I know that you only submit the number of miles, but for records, you have to have the odometer readings. I take an odometer reading on January 1st and December 31st.
Yep. Yep. And yeah, I don't do the odometer reading at the beginning of the year and the end of the year, but I track my miles, because I drive 50 miles every day to work and 50 miles home. So my commute is a significant portion of my mileage. But yeah, I kind of do the same thing. I track, at least I know how many miles I put on in a year, but then I only take the business miles. That's all I really care about, is those business miles, because I do standard mileage. So if you're going to do actual expenses, man, yes, you need to track your mileage from the day 1 to day 365 or 366 on a leap year. I mean, you got to be that specific. And then you want to be able to say exactly what percentage, because that's the percentage of your actual expenses you're going to take. And remember, if you forget, it's like, oh yeah, I did an oil change, I forgot about that oil change. Guess what? That's you lose it. So you have to be very detailed when you do actual mileage expenses, which is why I do standard mileage. It's way easier.
Yeah.
So Jennifer, that was my question. I'm sorry, I don't mean to interrupt, but that was basically, so just a number of miles is good then if you're just doing what you do, right? Okay, that's all I want to know. Yep. Okay. All right, thank you.
Of course.
Sean had a question. He says it's for me. If you set up the Soul with TV, can that be changed? I'm not sure what you mean, Sean. Can you jump on and elaborate, or unmute yourself and ask?
Yeah, what I was asking was if you signed up using your Social Security number with Traveling Vineyard, can you do them and change it to your EIN number? Or because I have my own LLC, and like she was talking, it's a parent company that houses all of my businesses.
Oh, wow. I would call support on that one.
Okay.
Yep, me too.
Okay, yeah. Thank you.
We should be able to help you with that.
Yeah, and So, and the nice thing is you're at the beginning of 2018. I don't know if they'll go backwards and change that for 2017 for you.
Right. Well, I didn't make much in 2017 anyway. I joined halfway through the year, so.
Take the deductions.
Kill it this year.
Yeah, that's my goal.
Truly, take the deductions. And it isn't the example that I showed here, but if you can reduce your taxable income by taking a loss, take the deduction. I mean, you spent the money, you put in the effort, and there has to be a benefit for you there too. And it does. It helps you keep going. So
Now,
take the deduction.
A quick question on that though is the fee that the kit purchase, is that deductible?
Yes.
Okay.
Because you are not able to do this business without purchasing that. It is a necessary expense for doing this business. Yep. And the nice thing is, if you pay that fee and you get the 2 tasting sets, and then you decide, you know what, this isn't worth it, guess what? You got a $200 loss. I mean, if that's all you do and you start the company and quit, you got a $200 loss. I don't recommend that. I have made more money with this business than any other business I've ever done. So I don't recommend that, but you can.
Right. Okay. And then the other quick question I have too is there like a list of stuff that we can find on the internet that we can deduct? Because like I'm totally lost on all this percentages and stuff that you were talking about now.
Yeah. The short answer to that is no. There is not a list of things that are deductible because, for example, wine, cheese, chocolate, grapes, lemons, and jelly beans would not be deductible under Mary Kay.
Right.
You know what I mean? So every business is truly different. And so I do have that spreadsheet for just some kick around some ideas and hopefully just really get your mind turning on that. But whatever dollars you had to spend in order to make money with this business, that's what you want to track and deduct.
Can I share that spreadsheet on our team page, Jen? Is that okay with you if I share it globally? Cool.
You had a slide too that had kind of a list on the one side of everything. I mean, I'll just go back and look tomorrow. But there was one, I was trying to take a picture of it and then you switched it right when I did it. Or I was trying to.
Of course.
I can't remember which one it was. That one. That one. There you go. That was a great list.
And
I've done direct sales before. So, I mean, it's been a while, but it was just kind of getting back into it and remember all the things that are hard. So.
Yep. Man, you guys are great. These are really good questions too. Thank you.
Hang on a second, Jen. I'm going to take a screenshot of that. And would it be okay to post your presentation too on our team page?
Absolutely.
Okay.
Yep.
Because that way we'll have the screenshots and you guys can check it out at your convenience then and look in depth at stuff.
Yeah, that'd be good so we can go backwards and
exactly
review everything.
A couple new questions came in, and I'm assuming yes, the sales tax and shipping that we pay on tasting sets, those are also deductible, correct, Jen?
Oh,
I think we lost her temporarily.
Yes. Yep.
Yes.
And cut out, not me this time. It pretty much. Well, the only thing that you really want to be concerned about in this business is the stuff that you buy for personal use. And again, I mean, the nice thing about having this amazing business is, guess what? I give wine for every gift possible. And part of the reason I do that is because I can give a bottle of wine and say, hey, what do you think of that? Did you like it? Would you want to book a party? Because we have some other really amazing wines. And I mean, that can be a tax deduction for you. It can be an advertising expense, a gift that you give to somebody. And I mean, I do that all the time. Again, I'm not going to recommend that. If you have the money in your budget to be able to do that, then great. But if not, then don't. Please don't. Please don't go into debt for this business.
Yeah, we don't need to. There are a lot of like the hosting gifts, the guest rewards, all of that is covered by Traveling Vineyard. I really spend very little to build my business other than my networking events that I go to. So when I'm out and about and doing networking events.
What else?
Any other questions, you guys? Good interaction. This was fantastic. Jen, I appreciate your knowledge so much. This was great. And will some of us see you on Saturday?
Unfortunately, no. I actually have a prior engagement this weekend, and I'm really disappointed. I'm going to miss you guys. But you have my contact information here. I do screen calls. Don't be offended. But you can shoot me a text. You can shoot me an email. I will give you any information I can. Obviously, my opinions are my opinions. I'm very confident in my opinions because I've worked with the IRS for so many years. But you know, just talk to your tax preparer. Make sure you're comfortable with the deductions you're taking, and you know, have it in writing. Just try, do a little bit and try to get that those record keeping skills built, and take the deduction and build this sucker. It's a great business, and thank you for putting up with me with my cold.
Oh, thank you. Thank you so much for taking your time to educate us and help us, you know, learn a little bit about this and get more comfortable. It's big.
Yes, thank you.
All right.
Thank you so much.
Yeah.
Penny, are you going to be in
Very
Minnesota?
welcome.
What's that?
Penny, are you going to be in Minnesota?
No, I can't make it to Minnesota.
All right.
Oh, I know.
Hang on.
You guys.
Never mind, not going. No.
I'm not going either.
Zoom me in.
Okay.
Yeah.
You were such a blast in St. Louis, though.
Yeah, well, you guys will have to zoom me in, and we'll share some wine long distance.
I'll bring Happy
There we
Sam and we'll videotape it for you. Thank you, Jennifer. Thank you so much.
Thanks, everybody.
Thanks, everybody.
Have a good night, the rest of it. Cheers.
Cheers.
All right, cheers.
All right. Penny, I don't know.